So for some reason, there's a supply chain happening, supply chain issue. Now it's not for some reason. I can explain it in just 1 second. But what does this all mean for real estate? Well, let's roll this thing up like an onion, one layer at a time. So here's what happened. First of all, when the economy crashed, interest rates were brought down to rock bottom in the fastest possible way, which means mortgages went to the rock bottom in the fastest possible way. They weren't high before, but they're rock bottom because the Fed has to do something. Now, the Fed was already from 12 years or 13 years ago, from the big recession in 2008, 2009, had already been like buying these subprime mortgages and basically done this what's called quantitative easement. And the secret that nobody talks about is that they never actually stopped, right? They kind of phased it down, and every time they did, the stock market went down. By the way, you saw the stock market go down in the last month. Why is that? Because the Fed announced that they're going to stop buying billions and billions and billions of dollars of bad, basically, bonds or of bonds and loans and things like that, that the market could just get rid of, right? So now they're not doing this anymore. So guess what? A big, huge, fat buyer disappeared out of the market, or it's reduced its buying. And if there's less buyers, guess what? What happens to prices? They go down. So that's why you see the stock market going down. The economy is not doing worse. The economy is actually humming along, not humming along, but roaring still back, right? We're still in catch-up mode, right, from what happens before. Now, having said that, the government pumping money with $1 trillion here, a few trillion there. Now they're discussing 3.5 trillion more, infrastructure bill, another $1 trillion, and all this kind of stuff has obviously also inflationary effects. But let's see the economy. People were clamping down. They got money from the government. There was nowhere to spend it. They couldn't go on expensive vacations. They didn't go spend it anywhere. They stayed at home. They cooked more at home. So what happens is people actually put a lot of money to pay down debt. So during the economic crisis right now, debt went actually down because people didn't go spend it on brand new cars and all this kind of stuff. Right? So they paid debt down. So when you pay debt down, you pay off your credit cards and you pay down your student loans, you actually, as you continue having income, you have more discretionary income available. So now that people came out of the pandemic, they're like, oh my God, I have less debt. I have more cash in the bank. Let's go and spend it. So they started doing vacation. They're starting to drive around. Everyone seemed to be going to Yosemite Park seemingly at the same time, right? Everyone buying RVs because flying international is not so much available anymore. Just as of this week, the United States actually, the United States allows for international people to come back in again. Just as some of our international countries have opened up to the United States again. So up till a few months ago, you couldn't even freaking leave the country except for a few countries out there. But in a lot of countries wouldn't even let Americans in. So people focused on domestic consumption. Well, the problem is that when COVID happened and everything shut down, all the tankers, all the container ships that have like hundreds of containers on them, they stopped operating for a while. They were sitting in front of the Long Beach harbor for sometimes weeks before they got in. Then one boat goes to the Suez Canal, decides to go and put itself vertically on there and not letting anyone through anymore. And that took like 10 days to get it out. Now that added to the supply chain issue because a lot of the stuff is being shipped from China, from Asia, from Europe, from wherever it is. And it just doesn't get through anymore because now they have a backlog of months that they need to work off. Now you can say, well, just work double shift. Well, that's easy enough said. But look at a harbor like Long Beach Harbor or San Francisco Harbor. There's only so many docking slots for these humongous ships. It takes a certain amount of time to get the stuff off those ships. Then those ships get on. You can probably with overtime, and usually these harbors have always worked 24/7. So it's not like you can add another shift to it. You can work faster if you want, and you can probably get 2 ships processed more for every 3 days or every week. You can get 5 ships processed more than you than you could, even at your highest capacity. Well, that doesn't make up for hundreds and hundreds and hundreds, if not thousands of boats that were waiting in there. Right now, as I've just read, is the average time that a boat sits in front of the harbor in Los Angeles is now 8 or 9 days before it even gets serviced. So in other words, guess what? This is not going to go away. So from a supply chain point of view, if you're thinking about getting a new refrigerator, order it now because you'll have it for Christmas if you're lucky. Right? The same thing happens now to the cars. The car industry is not booming. It's not crazy. What's happening is that the car dealerships are selling every car they can get because the car manufacturers are slower in producing those cars. First of all, the cars from Toyota that are being shipped from Japan are not getting into the country because the boats are sitting in the ocean for an extra week or 2 weeks before they even get unloaded. But then also the cars that are being produced in the US are not being produced because everything went to just in time, right? Everyone to just in time, which what just in time means is that for decades now, we only produced as many lights as we needed in the next week. So these car manufacturing companies, they're no longer sitting on a warehouse with a half a year's worth of lights and trunks and seats and leather and whatever it is, all the little pieces that you need for a car. They sat on 1 week's worth of that. So guess what happens? The supply chain gets disrupted, COVID hits, and all of a sudden they have to shut down their factories. And even now, they're just ramping it back up. They're not yet at the levels that were before. At the same time, now all these Americans come out and they're like, hey, I got money, I got less debt. Let me buy myself a new car. Let me buy myself a used car. And there's not enough cars on the market. That's what's happening. That's why these car dealerships are empty. That's why these used car dealers are empty. It's not that the demand is an all-time high. It's that the demand is back, but the supply is not there. And what that leads to, again, with all the money that I mentioned already, is inflation. Right, is inflation. So here's what happens right now. So what does it mean for real estate? What does it mean for real estate? Let's go back into real estate, right? The interest rates were at rock bottom. Now people basically were sent home and they started realizing, man, I don't like my house here. I mean, it's tight. It's okay if I go to work and come back in the evening and I go on vacations, but now I actually have to live in my house for like nonstop, 24/7. For like months at a time, for a year and a half without really going out a whole lot. So they started realizing they want a different space. So all of a sudden, people started looking like, well, interest rates are rock bottom. I still have my job. Let me go find a new house. And all of a sudden, everyone started flooding the house market. Plus, on top of it, if you add to that the government is printing trillions of dollars here and there and left and right, so they're afraid of inflation. So there's like, well, if I have my money in the bank and inflation is at 6%, which really means it's at 12%, because the government doesn't include the stuff that is most important to people. Little by little over the last decades, they've removed all the most important stuff. They look like the core price index doesn't even include gas. How crazy is that? The core price index doesn't include the cost of energy and a couple of other things. Yet, guess what? What is after your rent or your mortgage and your taxes, of course, and things like that? What is one of your biggest expenses? It's filling up the car with gas, but that is not included anymore, right? It's so crazy anyway. And that's not a Democratic or Republican issue, guys. That was done for the last 20 years. That was done for the last, I think, like 20 something years. They removed they changed the way that they count inflation in order for the inflation number comes down. So you really want to look at what is inflation really doing, and inflation is going up. So therefore, people are realizing that there's like, well, if inflation going up, then hard assets go up, which is houses. Let me not have my money sit in the bank account where it becomes worth less and less and less. Let me instead go and buy a house. And since they paid off debt, and since they saved up some more savings, right? And since the interest rates are lowest in history almost, they're like, hey, I qualify better during the pandemic for a new home loan than I ever did.
If you like this video, please make sure you like, comment, and subscribe. And also for additional training, just go over to the website listed in the description below.